Good morning, everybody. I'm pleased to welcome you all to Napatech's Q3 2019 Interim Management Statement Presentation webcast. I'm Ray Smets, CEO of Napatech. With me today is Heine Thorsgaard, our Chief Financial Officer. Today's Interim Management Statement for Q3 2019 was fully and finally released earlier this morning on the OSE and is available on our website at napatech.com. For your information, a recording of this webcast will also be available on the Napatech website later this morning. Next slide, please. Please note that this presentation contains forward-looking statements that are subject to a number of risks and uncertainties. Our actual results may differ from those discussed in forward-looking statements. Next slide, please. During this presentation, I will present Q3 2019 business highlights, including a summary of our key financial results for the quarter, an updated information about our market and our business progress in the quarter. Heine will provide a detailed review of our Q3 2019 financial results, and I will close with a review of our 2019 outlook for our business. Next slide, please. I would like to inform you of two key investor events that will happen later today. First, we are hosting our Capital Markets Day event today from 12 noon to 1:30 p.m. Central European Time at the Hotel Continental in Oslo, Norway. This event will be live streamed on our website. Registration is required to attend or review the live stream. To register, please visit Napatech's Investor Relations page on the napatech.com website. In this Capital Markets Day meeting, with our new and existing investors in mind, we will provide additional details about our evolving and growing market, updated information about our addressable market, and the trends and directions of the FPGA SmartNIC market that we are a part of. In this meeting, and as we've done in our quarterly reports, we will provide our pragmatic aspirations for growth beyond 2019 through 2023. In addition to me and Jared Sickett, our CMO, both presenting, we'll also be joined by guest speaker Vlad Golubov, Principal Analyst, Data Center Compute at IHS Markit Technology. Vlad will present a data center compute industry overview, which is directly applicable to our target market. We will conduct a Q&A session at the end of that event, and it is my hope that our investors will leave this meeting with a better understanding of our ability to drive growth. Secondly, we're also participating in an AX Forum live stream event later today at 3 p.m. Central European Time on Facebook. Axel Engebakken, analyst at ABG Sundal Collier, will be interviewing me about various aspects of the Napatech's business and market. Interested viewers can find this event on the AX Forum Facebook page at the link provided. Next slide, please. Now I'd like to talk about our business highlights. I am pleased to announce that Napatech has posted another sequential solid quarter and continues to execute well in 2019 towards its updated guidance objectives. And we feel good about achieving our objectives that we have communicated. We delivered solid revenues in Q3, generated even stronger improvements to our gross margins, continued to maintain positive EBITDAC, and 3 quarters year-to-date in 2019, we have delivered positive free cash flow. Specifically in Q3, which is usually our seasonally slowest quarter of the year, our revenues were solid, and we have healthy momentum as we move into Q4, which is seasonally our strongest quarter of the year. Many of our investors have been tracking our progress towards a projected turnaround in 2019 over 2018. And we have shown good progress continuing to deliver or beat our guidance. We have been diligently working on reestablishing a solid and stable foundation that we will build our revenue growth upon. We continue to further improve how we manage our operating expenses and working capital, which is especially stressed in the second half of this year to bring as much benefit to our cash position as possible. Our year-to-date results are good, with positive free cash flow, sequential improvements in operating expense efficiency, and improved management of inventory and working capital. We are very proud of the fact that we can report for the first time as a public company year-to-date free cash flow at the end of Q3. It will be very clear in our detailed financial results, which we will review later in our presentation, that our execution continued to show improvements to Napatech's operation. But I'm also very pleased with the progress we've been making to build new strategic products that we believe will bring Napatech into new opportunities and provide a path for revenue growth over the years to come. I am convinced that our expertise in FPGA software running on both the Xilinx and the Intel FPGA chips will give customers new ways to solve the ever-expanding problem of getting better performance from CPU-hungry applications that run on servers in the cloud. Next slide, please. From a numbers perspective, we delivered good revenue growth in Q3 of 38.7 million DKK, adding up to 116.6 million DKK in the first 3 quarters of 2019, 124% year-over-year growth compared to the first 3 quarters of 2018, and on an adjusted basis after one-time events, up 63% year-over-year growth over 2018. For a third quarter in a row, gross margins continued to move up sequentially to 81.6%, way ahead of our 69% annual guidance. We did benefit from some foreign exchange tailwinds associated with the US dollar and some benefit from product mix in Q3, but these strong margins also demonstrate several other significant points for us. One is that we are doing a good job managing our product design and costs, but also it's a good sign that we're getting greater returns for the value of our product that we provide. Because of our good progress here, I will give you an updated guidance range for our annual gross margins when we get to that point in the presentation shortly. All in all, our good performance in the first 3 quarters of 2019 shows that we are building a solid base of business with existing and new customers who are using our FPGA-based SmartNICs to solve a growing number of application performance, networking, and cybersecurity problems. And we hope our investors will agree these results are a good sign of stability over our prior few years. I will invite Heine to present more details about our financials shortly. Next slide, please. As we've shown before, Napatech sits at the crossroads of 2 major market forces. On the horizontal level, our physical addressable market is a rapidly expanding number of commercial off-the-shelf servers with more and more slots where network interface cards, or NIC cards, can reside. We have shown over the year that the server market continues to grow. And with every new server deployed, there are new slots where customers can deploy NIC cards. On this horizontal market force, not all NIC cards are created equal. Some provide basic connectivity functions. It is the SmartNIC that delivers the highest performance and value to accelerate applications that need the extra horsepower. I will share on the next slide a perspective of the growth in this market. The vertical market force is a growing set of critical applications that require more compute power to operate and perform. Consider this market as a catalyst for growth as the rapidly expanding virtual market of critical applications require more and more to work faster and securely. Napatech sits at the high end of this market where the FPGA technology is needed to run the most mission-critical compute-intensive applications faster, more efficiently, more securely, and with unmatched performance. This part of the market tends to be the less price-sensitive part of the market, needing a technical solution ASAP that delivers best-in-class application acceleration and security. This is where Napatech will focus its expertise to catch and grow future revenues. The FPGA market comes of age in this market condition, offering cloud or data center-based application providers a better way to enhance the performance of their servers by offloading server CPUs and accelerating application performance on FPGA-based SmartNICs. Next slide, please. We are glad that we can bring our technology expertise to solve problems in a growing market. Think about the total market as all of the NIC cards sold for basic connectivity, to offloading of servers, and accelerating applications. The overall market is growing fast, from $1.7 billion today to $3.7 billion by 2023, according to IHS Markit. In a narrower part of this market called the programmable NIC market, where other sophisticated companies like Napatech operate, that market is $386 million today and growing to $1.6 billion by 2023. It is hard for NIC makers to address all parts of the NIC market. The technology has too many applications and use cases to be a one-size-fits-all kind of play. So taking it one step further, to better define Napatech's target addressable market, this market is a rapidly emerging end-user market where the highest-end SmartNICs are used. Using the data we have from various industry analyst firms like IHS Markit, we estimate that as applications expand and our use cases target these new applications like virtual switching and cybersecurity, we expect to see this part of the market grow substantially within the programmable NIC market by 2023. As with any growing market, there will be winners and losers. We intend to be a winner. So the way we see it, Napatech and its FPGA software and SmartNIC solutions are in the right place at the right time with the right technology to capitalize on the growing needs of the application acceleration market. Next slide, please. I was pleased in Q3 to see a number of new customers join the growing list of Napatech FPGA-based SmartNIC customers. All of the logos on the upper part of the slide, and many others not shown, ordered and received Napatech products in 2019's Q3. Several new logos joined an impressive list of recurring customers in Q3. Some of these new logos include Morgan Stanley, Bank of America, and Charter Communications. We expect that these customers will continue to buy more products as they develop and deploy more servers within their data centers for the key use cases we help them solve. On the bottom of this slide is a summary of the applications where we solve key application performance challenges for these customers. There's key words here that are easy to see: acceleration of network monitoring and analytics open source apps, increased performance of cybersecurity open source apps, faster, more accurate network monitoring, better packet capture and more accurate network traffic monitoring, and improvements in service assurance for network apps. All of these critical applications of our Napatech solutions are solving real-world critical problems, and if we keep finding the right opportunities, we are confident that we can grow our business over time. Next slide, please. We have been articulating a plan to do just that, grow. It is the basis of our plan of attack. To grow, at Napatech, we have a strategy to focus on our core competency, leveraging our expertise in FPGA software to out-innovate the competition and build new higher growth product lines in application acceleration for virtualization and cybersecurity solutions. We will do this by running three important plays. First, we will continue to drive FPGA-based SmartNIC leadership with our current packet capture solutions. This product delivers all of our revenue now and will remain a stabilizing foundation for growth as the future comes. Secondly, we will expand our SmartNIC leadership beyond packet capture to address new high-growth markets to accelerate applications and services in new areas of the cybersecurity market. We know our world-class expertise in FPGA-based solutions is highly leverageable and valuable to new customers building new cybersecurity solutions. So we will be supercharging our FPGA-based SmartNIC software and hardware designs to get access to these high-growth parts of the cybersecurity market. And finally, we will continue to drive our innovative development in virtual switching acceleration and hope to emerge with a top-performing FPGA-based solution into new market areas in the massive move to the cloud for virtualized network infrastructure. We are more optimistic now that this new product area can create new revenues for us in 2020 and beyond. Next slide, please. So we remain pleased with the activity and performance we have strived to deliver at Napatech in 2019. Now I would like to turn the call over to Heine Thorsgaard to review more details about our Q3 and year-to-date 2019 results. Heine?
Thanks, Ray. Revenue in Q3 amounted to 38.7 million. Adjusted for special items in Q3 last year, revenue is up 57% year over year. The revenue in the first three quarters of 2019 was 116.6 million. Reported revenue is up 124% compared to last year and up 63% when adjusted for special items in Q3 last year. Gross margins were very strong in Q3, and gross margins in the first three quarters was 74.6%. When adjusting for special items in Q3 last year, margins for the first three quarters are up 5 percentage points year over year. Staff expenses and other external costs amounted to 29.7 million in Q3 compared to 35 million Q3 last year. For the first three quarters, operating costs were 91.4 million compared to 119.8 million last year. Adjusted for IFRS 16, other external costs have dropped 27% compared to 18, and staff costs have dropped 16%. This drop in operating costs is the result of our hard work and focused cost management initiatives this last year, and we are satisfied with the progress we've made so far. EBITDA amounted to plus 1.9 million in Q3 compared to minus 40.5 million Q3 last year. This is, as Ray mentioned, the first quarter since Q4 2016 with a positive EBITDA in Napatech, and it shows how far we've come with the turnaround. In the first 3 quarters, EBITDA amounted to minus 4.4 million compared to minus 92.8 million last year. And this is an improvement in EBITDA of 88.4 million. Let's turn our attention to the cash flow statement presented on slide 14. Cash flows from operating activities amounted to 0.2 million in Q3 2019 and 13.9 million in the first 3 quarters, compared to minus 35.6 million and minus 62.3 million in the same periods last year. End of Q3, net working capital was at 20.9 million, corresponding to 53% of the revenue in the quarter. As communicated earlier, our net working capital target going forward is 60 to 70% of the quarterly revenue. We've been working hard on optimizing net working capital the last year with improvements on inventory levels and trade receivables, but net working capital increased 5.5 million in Q3, and we expect the increase to continue in Q4. Net cash used in investing activities in Q3 amounted to 4 million compared to 7.6 million in Q3 last year. Free cash flow in Q3 amounted to minus 3.9 million, up 39.7 million compared to Q3 last year. For the first 3 quarters of 2019, free cash flow was positive at 0.9 million compared to minus 93 million same period last year. It is worth noticing that it's the first time since Napatech went public in Q4 2013 that we've been able to produce a positive free cash flow in the first 3 quarters of the year. The positive cash flow demonstrates the effect of our ongoing turnaround process, and the end of Q3, cash and cash equivalents amounted to 53.1 million. Now back to you, Ray.
Next slide, please. Thanks, Heine. Now let's turn our attention to our outlook for the remaining part of 2019. Next slide, please. After raising our guided ranges at the end of Q2, we remain optimistic that we will deliver on our key financial areas for 2019. First, we reiterate that we expect revenue to be in the range of 150 to 180 million DKK, which will represent solid growth in 2019. We remain optimistic about this guidance as we enter Q4 with good momentum. Gross margins in the first 3 quarters of 2019 have been higher than guided, and Q3 was truly stunning. We are confidently updating our guidance for gross margins again based on where we ended Q3 and where we expect Q4 to be, to a range of 71 to 73% for the full year 2019. The gross margin improvements in 2019 have improved over our initial guidance due to good cost execution in our products, our ability to maintain our product's value in the market, and some favorable benefits from product mix and foreign exchange tailwinds. But the trend is positive, and this relays another very important sign about our progress. Our focus and good execution around managing our operating expenses has also delivered a great story as part of our turnaround, and we are well on our way to deliver on our prior revised guidance for operating expenses in the range of 110 to 115 million DKK. We have strived to set a new standard inside of Napatech to prudently maintain the right level of capitalized development costs. We are optimistic that we will achieve our prior improved guidance in 2019 in the range of 13 to 17 million DKK, which continues to be significantly lower than in previous years. With performance in the middle of the guided ranges, EBITDA would be 6.3 million DKK, up 5 million DKK from previous guidance, and EBIT would be negative 16.2 million DKK, up 5 million from previous guidance. Compared to the original guidance from the beginning of the year, with these new guidance expectations, EBITDA and EBIT are both up 14.1 million DKK, and EBITDAC is up 21.6 million DKK. Achieving these results would be a good outcome for our business in 2019 over prior years. In conclusion, we are now within our busiest quarter of the year. We have momentum from good performance in the first 3 quarters of 2019, and we intend to deliver on our objectives to you, our investors. We have spent numerous hours to demonstrate the pragmatic and realistic plan so you can have a plan for your investments accordingly. We hope we have achieved that goal so far this year. I believe our results in 2019 so far have shown that our potential to be a predictable and viable business going forward is materializing. And we are building a more stable, transparent, and more predictable business for Napatech. We are a team of technology professionals who really do strive to improve our spot in the business world, solving real-world problems that just won't go away, but are solved with the technology and expertise that we bring to the market. And in doing so, we build a good prospect for investment for our investors. Me and my team at Napatech will continue to work hard and work smart, growing a business built upon a solid foundation of FPGA technology expertise. We are living up to the expectations we have made to our shareholders in 2019, and we will continue to strive to improve all aspects of our business to capitalize on the opportunities they see ahead of us. And we will always strive to give you a realistic view of what we can achieve. And then we are committed to find a way to beat it. So now we need to get that job done. Next slide, please. In conclusion, if you have questions or strive to learn more about our market and aspirations, please consider joining our Capital Markets Day event today from 12 noon to 1:30 p.m. Registration is required to view the live stream. Please use the link provided on the slide or visit the Investor Relations page on the napatech.com website. And of course, you are welcome to view the AX Forum interview, which will be broadcast live on Facebook at 3 p.m. today. Next slide, please. I would like to thank you, our new and existing investors, for the support and advice you've given us through 2019. But I'd really like to give a hearty thank you to all of the employees of Napatech for a job well done so far in 2019. Have a good day.